2021 annual financial report of Ezgo, which should arrive on February 2022. So we have 3 to 4 more months before this report. Let's see what the figures, let's estimate the figures that we are about to get, and also let's see where the production capacity is at the moment and run the numbers from 2021 to 2024 in terms of the capacity, the sales, the margins, and the potential price for Ezgo. So let's run into it. In terms of manufacturing facility, we have the numbers. So where Ezgo was hoping to reach 32,000 units of annual average capacity in 2020. So basically produced 32,000 bikes, and they had a plan to produce 100,000 bikes by the end of 2021, with a forecast to produce 240,000 of e-bikes in 2024. After, in their 2020 financial results, they have said the following: assuming an average consumer price of approximately $200 per e-bicycle, if we make 100,000 units, that would give us a possible revenue target of 20 million for only for our e-bicycle fiscal 2021 year. So let's right now run the numbers and see what we have. So the way Ezgo publishes their result is the following. They always publish for the annual report, they publish the last fourth quarter of the previous year and the 3/4 of the present year. That's how they do it. Let's call this 2018, 2019, 2020, 2021. Here we would have 2022, 23, and 24 predictions. Okay, so the results that we have right now are in green. It's the total sales in 2018 were 3 million. In 2019 were 5 million, and in 2020 were almost 17 million. So here we can see a consistent growth. We can also see that before, the e-bike sales in 2018 were inexistent, and the business was running mainly on battery rental and battery pack sales, which represented 83% and 17% respectively. After, we can see that they started to make bicycles, so they made well, we don't know how much they made, but like 1,000 bicycles, because the bicycles sold were 200,000, so basically representing only 2% of the sales. And the battery trading was, went up from 0, and battery rental went down from 83 to 74. Then we can see that in the year 2020, the battery rental business just basically vanished. It went from 83 to 74, and now it's only at 9%. Why is that? Also for battery trading, and yes, battery trading went to 0%. Why is that? It's because they were ramping the e-bike sales. We can see that it represented 66% over here. And I expect, because we received in June 30th, 6 months, fourth quarter of 2020, first quarter of 2021, the sales of 10 million with e-bikes representing 80% of the whole sales, which is where they sold 34,000 bikes for the 6 months. Right now, we are predicting what they would do in the second quarter and third quarter of 2021. And basically, this is how I predicted. You have 100,000 e-bikes with annual production, where we subtract the 34 they have produced for the first 6 months, and we get 66,000 e-bikes. This we multiply by the average price of 224, and we get sales for e-bikes amounting to 15 million. We multiply this by 1.2 and get 18, or we do the proportion, and we get 18.5 million of sales in second and third quarter. So basically second half of the year 2021. We add this to 9.6 million, and we get our prediction for the sales of 28 million, which is up 68%, 168% from 16.8 million. This is clearly a huge growth. Then our e-bikes would represent 80%, so 22.4 million. And e-bike sold would be 100,000. The gross margins, we say that they would be 11%. Here also, it's worth noting that from 18 to 19 to 20, the gross margin here is, it was growing because of the battery trading. But once we shift to the e-bike production, the gross margin is falling and net margins are falling drastically because this business is running on very tight margins, as we can see here. So basically we predict here that net margins would be at 0. Also, it's worth noting that when NIO did their IPO in 2018, they were doing a loss, guys. There was a loss for NIO of 54 million for the sales of 2016, 216 million. In 2017, they had a loss of 28 million from sales of 119, and 2016 they had a loss of 36 million from a 55 million sales. So we can see that they were always negative until they didn't, until the sales increased dramatically for them to have a net profit, which they only got in 2019. So remember that Ezgo right now is not not running in the negative. Well, it has been. It received a 300,000 loss in the first 6 months, but that's nothing compared to the to what NIO basically had. Okay, so right now let's see the price to sales ratio in today's market capitalization. So we can see that it's 12. So basically what I do is I take 38 million and divide it by the total sales of 3.2 million in the year of 2018. We have a price to sales of 12. Then this price to sales is going down to 7.3, to 2.3, and now is at 2.5. Remember that the company sales is growing drastically, so their price to sales should also grow. So that's why I put a 3 price to sales in the year of 2021, 3.5 in 2022, and 4 in 2024. And this is how I get to the market cap. I multiply 2.5 by 38. I get a market cap forecast for the year of 2022 of 70 million. That's a growth potential of almost 2x with a target price of 5.3. Right now we're trading at 2.85. Same thing for the year of 2021. We would go to 8.6 price with a potential 3x growth with a forecasted market cap of 114 million. Same thing for the year of 2022, where we would get these numbers, so price target of 13.5 and a price target for 21, which represents a 7x in the year for the year of 2024. Also, they have mentioned that they will be doing approximately 500,000 cars in 2025, but I did not include this here because, you know, I just limited myself to 2024. Okay, so you can see that there is a clear potential here, and I would like to show you some photos that I have received from the investment relation department of Ezgo. So this is how the factory looks like. I think it looks pretty good, pretty clean. You know, it's not huge, but it's doing a good job in my opinion. Then we can see other photos. So they're testing the e-bicycle here. We can see the e-bicycles here, you know, on the production line. So everything is neat, it's small but compact, but everything is clean, which is a good sign, basically. Here as well, ready for, you know, to be sold, and here as well. Here as well, we have the batteries here, the battery packs, and we have this photo as well. There was another photo on, yes, I think that I showed you everything. There was also a video. Check this out, my friends, check this out. So you have this video, you can see the tricycles are being made, and write me in the comment and please like the video for me to send you this video. So, you know, we can put it one more time. You see. So yeah, the production looks pretty good. Everything is pretty clean. Remember that 70 people work in Ezgo. So basically, guys, that's it. I think that's even us, you know, holding the bag right now at this precise moment. I think that we have a pretty big opportunity for this share. It's a little bit bad that, you know, we lost a little bit of time, but you know, being stuck to the share price. But if we want to get a 2 or 3 or 4 or 5x or even more, that's what we have to endure. This is just the life is. So if you have questions, comments, please, you know, comment. Please subscribe and tell me what you think.